You are listening to ChartingWealth.com for Thursday, the 29th of December, 2016. Let's continue to see what these markets are doing. Down for the day on the S&P 500, 0.81%. We gave you those warnings yesterday. The up movement was getting very long in the tooth. When we look at our two-day chart, we can see that the original up movement on the 2-hour chart started way back on November the 4th, right around there. Then we had the crossover on the 2-day. Remember, it starts as a little wave and it builds. Then the 2-day chart crossed over going up on the 10th of November. Then the weekly chart crossed over going up sometime around the 23rd of November, right around Thanksgiving. Then we had the retracement and the cross going up. The real jumping in point for us on the 2-hour chart was all the way back on, let's see here, what date was that? It looks like around the 3rd or so of December on our 2-hour chart, and massive up movement. The safest point to get in and ride the upflow was somewhere around, let's see, the opening of about 220 all the way up to the high somewhere in the neighborhood of about 228. A good $8 gain over the course of about 10 days. That was where the real money shot was for us, where we really looked to capture it. As we said yesterday, yes, we had the market turn up on the 2-hour chart for us, but the market was getting very, very long in the tooth. And what did we see happening? Well, we saw that we were losing energy on the PPO, the price percent oscillator. It was edging down on the 2-day chart. And again, remember, we're in a confirmed up move on the weekly. The 2-day also confirmed up move. The 2-hour crossed over briefly and then moved back over again strongly as the PPO is getting very close on the S&P 500, crossing over going down after today's action and the closing of the latest candle. What do we see? Again, primarily sideways movement with stronger tones toward the downside. Now, we do have a spinning top at this point on our Heikin Ashi candlesticks, but we're getting very close. Hasn't occurred yet. Remember, the weekly trend line is still going up, but the 2-day is getting close to crossing over going down. So again, pay attention to all these things. What do we see happen? We got a herky-jerky up on the 2-hour back at 10 a.m. on the 27th, and then at noon on the 28th, we had a real pullover. If you had hopped in sometime in the morning of the 27th, you should have hopped out, taken your minor loss, and gotten out by noon on the 28th. Again, like we said, getting long in the tooth. We've now penetrated on the 2-hour chart our 2-day trend line, still above the weekly. So we don't have confirmed jumping into down moves at this point. We're just talking about worrying that the up moves are closed out at this point in time on the S&P 500. Now let's go back to our 2-day chart and take a look at what's up with the Qs. It was down 0.77%. What do we see happening here? Well, the Qs is interesting. It's not like the S&P 500. It's been going up since the 12th. Well, it's actually crossed over on the 8th, forgive me, and on the 2-day chart. And it's continued to move up. We haven't, however, had a confirmed crossover on the weekly chart yet. We were trying to be hopeful that we were going to have a crossover on this week, but it has never actually materialized. It has tried crossing over, but we have not seen it occur. And of course, we can't call it until the end of the week, but it has not happened yet. So we'll continue to see if indeed the Qs does, but it looks like it is weakening too. However, I will tell you that it is a green up move, even with the down movement over the course of the day on Wednesday the 28th. The 2-day candle is still actually a green open box up moving candle. Now we do see the PPO is actually sliding sideways right now, which is not a good sign. Also, the derivative oscillator has lost some of its energy. So again, markets are weakening. If you've seen our postings on Facebook and Twitter, that's what we've been saying since about the 16th or the 20th of December. So again, markets are not looking super strong as far as the stock market goes. But Where there's a bull market or a bear market, there's always the opposite. If there's a bull, there's a bear somewhere. If there's a bear, there's a bull somewhere. What do we see when we move on to TLT, which is the bond market? Well, we see that it is actually up for the day. 0.71%. We had a crossover going up on our 2-day chart, still confirmed down move on our weekly, but we also had a crossover going up on the 2-hour chart. Not telling you to get into, not calling a bottom on bonds, but it sure is looking nice. We've now seen the 2-hour chart cross through the weekly, and the PPO has crossed over on that 2-hour chart, and there is strong up movement since things started moving up on the morning of the Wednesday, the 28th, that first 2-hour candle at 10 a.m., and the market has been shooting up since then all day long on the 2-hour chart. So we had a crossover on the 2-day back on the 22nd, and we've seen the market continue to move up all day on the 28th on the 2-hour chart. So let's just watch that and see if indeed, again, it's not time for us to get into this because we still have a market on the weekly chart that is going down. Remember, for us to get into a trade, I was just writing about this in one of the chapters of the Charting Wealth book, is you've got to make sure that all of your trend lines, and that is your PPOs, your price percent oscillators on the weekly and the 2-day, and then the 2 or the 4-hour are going in the right direction. Then and only then do you consider getting in. And it's typically after you've had the 2-hour, then the 2-day, then the weekly go. Then you wait for the pullback on the 2-hour, and when it goes again, that's usually your best point. Well, we don't have that yet on TLT. In fact, this is just maybe the bottom occurring. So dangerous to hop in now. I mean, can you? Sure. You can do whatever you want with your virtual funds, but it's not the way we train because, again, we're trend followers. We want to hop in when the getting is good, and that's after the trend's already been set on the weekly in the direction in which we wish to trade. So, lastly, we're going to go to gold. We're on our 2-day chart. Take a look at gold, still confirmed down on the weekly chart. Still confirmed down on the 2-day, but getting very close to crossing over going up on gold. Gold was up for the day 0.27%, not much. We have a green open box candle, and gold is trying to recover. Don't have a call to make on that at this point. We can see on the 2-hour chart, gold has been going up for a long time on the 2-hour chart, but it's not been a very accurate chart. Why? It has just now reached where it was and moved above throughout the course of the day on the high it reached on the 19th after it dropped off. The reason is gold is sliding sideways. The PPO does not work very well in a sideways sliding market. You need a moving market. When you see the Bollinger Bands get really close, it means volatility has left. And that is when the PPO does not tend to work as well as it should. Now, the derivative oscillator is giving you some very good clues when it crossed over going back up again. But again, we don't want to trade in a bottoming market. We want to see if indeed it bottoms and turns around, or if it keeps going down, then you may have some entry points. Folks, that's where we are as we end the day on Wednesday. As we go into Thursday, the 29th, we so appreciate you being with us. If you have questions, problems, concerns, we love to hear from you. All you have to do is go to chartingwealth.com. Let us hear from you there. You can always follow us on Facebook, Twitter, Instagram, YouTube. We really appreciate it if you subscribe to our YouTube channel, if you appreciate what we do. And we also like you to subscribe at iTunes. Give us a 5-star rating. You guys have made us as high as number 6 in the world as far as stock market podcasts go, and we so appreciate your support and your help. You know, we do all this for you. We don't charge for what we do. We do this because we care about you learning how to trade. We've never charged for anything. We've had a lot of people beg us to teach some classes, and we may do that in the future. Don't have any plans at this point. We're working, of course, on our book. I did want to let you know that I will be traveling out of the country from the 1st of January through the 7th. I will be in Central America. Internet connections are sparse. I will try to get some broadcasts and training out if possible, but I want to forewarn you, this happens once, maybe twice a year. We were in Europe a few months ago, about 6 months ago, and it was very difficult. We were actually on a boat to get our broadcasts out. So hopefully we'll be able to continue to keep up with you, the markets for you, but just be aware of that. Don't get mad at us. And we so appreciate you. We do it all for you, and we love to hear from you. God bless. Take care from chartingwealth.com.